Hey traders, how's it going? Welcome to another thrilling weekly review. Okay, as I said at the start of this video vlog I was making, journaling is my weakness when it comes to trading, and I'm yet again a week behind. So what I've done, and you can clearly see in the background here, it says replay. So this is a week 46 recap. So that is the week ending the 21st of November. So what I've done is, as I'm recording this a week late, I've taken off the next week. So I'm kind of talking to myself from the future here. But that doesn't matter. This is my own record, and this will remind me what I was thinking about these trades a week ago. And then in a minute, when I do week 47 recap, we'll actually see what happened. So the end of week 46, we'd had a, some people call it a pretty steep sell-off on the SPY. I mean, it's nothing. It's a minor correction, especially if you go back to April. That was a steep sell-off. This is a little dip. We're down touching the 100-day moving average. Is it not going to bounce up from here? Well, I do know, but let's pretend I don't know. From here, it could either break the 100-day average and move down to touch and test the 200-day average, or this could be a nice support level like it was back in October. We're pretty much at the same level from the October drop, and we had a nice bounce back after that. So as you see, when we get general jitters in the whole market, I mean, what's the SPY? It's the top 500 stocks in the US. So if the SPY's dropping, those 500 stocks are dropping, and that's mostly what I am selling my cash secured puts on and covered calls. So it'll be no surprise to you that most of my positions have dropped this week. Okay, remember, ignore this nice green columns on the right hand side here. That's next week I'll talk about, because spoiler alert, it did bounce back, but let's just pretend we don't know that. All right, so that's the market for the last 4 or 5 days. Not great, but what did I do overall? So I sold a cash secured put on Barrick Mining Corporation. Jumped in on the 19th, I think it was. Yeah, back here, right here. What you tend to see with market jitters is people jump into precious metals, golds, silvers, all the rest of it, as a bit of a hedge. It tends to be a bit of an inverse of the SPY. So I thought I'll test the waters on it. And why did I go at the 34 level? Well, it's back to where it was before this little jump up. It's beneath the 20-day moving average, and for a long time now, Barrick Mining have been following their 20-day moving average. It's been very reactive to it, ignoring these little bits here, which quickly recovered all the way back to the start of this year. It's been following the 20-day. So, and even here we came back and touched the 50-day and straight back up, and again following the 20-day. So that trade is going well. Happy with that. There's a 21 delta when I took it. Good technical setup. I expect that to continue rising with the market jitters. What did I do next? Okay, UPST, my friend UPST. So there's some lines on here that are for next week that I'll explain. So ignore this put on the 26th of December. That's something I did next week. But I was, for UPST, as you can see, it's still dropping. I was assigned these shares at 56, way underwater down in 30s. $20 below my strike price. So I'm just continuing to sell weekly covered calls on this. So for week 46, I sold the 41.5, that's just here, strike. It was a 15 delta strike. As you can see, it's just at the 20-day moving average. That 20-day, it was resistance back up here on the 28th of October, may prove to be resistance again if UPS turns around. So I've got $5,600 tied up in this one, and the 41.5 strike gave me a 0.56% return for a 7-day trade. So on the covered call side of things for UPS, sticking well with my aim of 2% for any money tied up a month. So my intention with this one is just to keep selling weekly covered calls until it eventually turns around and heads back up to the area of 56. Yep, and if I'm tested, I'll just roll up and out, which, spoiler alert, happened next week as things recovered. And I'll explain these lines in the next video. NVO. Okay, the trade that just keeps on giving or taking, however you want to view it. So if you remember, this is the one I got my thesis completely wrong. This was not the bottom. I was assigned at 56 back here when it looked like it was on a recovery. It fell through the floor, had a bad earnings, and continued to trundle along this 47, 49, 50 mark. Weirdly, huge amount of volatility. So I was able at this one to take a covered call at the 53 strike, way up here, where the green line is, just there. Yeah. For a 7-day trade, and it was 68% implied volatility. I didn't know why at the time, and that always tells you what, and on a company like NVO, it's not got a massive beta. So to have huge volatility out with an earnings cycle basically tells you something is wrong or something is up. And it turned out that they were reporting some news on an Alzheimer's drug that ended up failing in later trials, which caused the stock to drop, as you'll see in the next video, quite significantly. I didn't know this at the time when I sold this cover call, but that was why I got great volatility, which allowed me to sell a cover call really high up at the 53 strike for a 19 delta, and I was again signed at 56, so that's $5,600 tied up for this. So I managed to get 58 cents for that covered call, which is pretty much bang on 1%, just a bit more, or 52% annualized for a 7-day trade. So I was more than happy with that. It was above my cost basis, so something miraculous happened to NVO and it jumped crazily up, which at a 68% IV, there was something coming. I would have been happy to let them go at that. Well, not happy, but it wouldn't have been a disaster. So yeah, that's where I was at the end of week 46 for NVO. Just doing the weekly covered calls until it turns around, gets back up to 56. At this point, the 20-day moving average is clearly resistance. So, we're just waiting for it to break through that. GME. So again, another one. Come on, look at this. Just look at this. That 22 level has been support for a year. It's been tested again and again and again. And as is always the case, the moment I jump in, Murphy's Law hits and that support fails spectacularly. Say that word, whatever, you know what I mean. And we've had a couple of weeks of just new low after new low. and we closed on Friday at 2014. So what did I do with this one? I took the opportunity, as you can see here, to roll it out by 1 week to the 5th of December, and I got me a decent credit of 21 cents. I kept the strike level the same, as GME is profitable. It's no longer, I don't think, the meme stock that it was some time ago. It's a profitable business, and I think it's kind of fairly valued in around the $22 region. So yeah, I rolled it out by a week. I took advantage of earnings coming up, gave a bit of extra volatility, which got me the 21 cents, which is pretty much an extra 1% for a 7 days additional in the trade. So hopefully we get a jump on earnings, and we get out nicely. If we end up with a drop, then I'm assigned at 22. I never sell a cash secured put at a strike I'm not happy to take assignment at. So if it happens, it happens. We'll move this one into covered calls. But yeah, an extra week for an extra 1%. I'll take that every day. PayPal. Yeah, that is just on a rocket ship down. Although we got a nice recovery on Friday, thankfully. We didn't quite get to the extreme of in the 56 area, which was the bottom of the last drop for PayPal back in April, where we got pretty close, down to 58. So this one I sold another covered call, but with the huge, so I sold the covered call week 47. So at the end of week 46, normally I would sell my covered calls on Friday for the following Friday, make it a 7-day trade. However, when I saw this large green candle on the Friday, I wasn't comfortable jumping in with a covered call that would have had to have been to get a decent premium somewhere around the 62 region. Such a strong comeback on Friday, for whatever reason that was. Monday could have easily seen it gap up. PayPal way underpriced at the 58 level, I personally think. So I didn't want to get called away at this level. So I waited for Monday to see what the options were. And I ended up selling the 60... Well, actually, I'll get to that in the next video. But yeah, spoiler, I ended up selling the 62 covered call because there wasn't a huge jump on Monday. But there you go. So on the Friday I didn't, because when you see these are called railroad track candles, straight down, straight up, basically no movement over the 2 days. That's either a catalyst for something about to happen, or somebody in the market feeling like something's going to happen. And I have seen them jump in the way of the second candle on a railroad before. So I waited for Monday, which I'll talk about in the next video. SoFi, yeah, with the rest of the market, we had the big drop on the Thursday. Friday was a green day. It's finished 19 cents above my strike. Yeah, I didn't do anything with SoFi. It's out to the 12th of September. We'll just see what happens with it. It's right on its 100-day moving average here. Which has not been tested since back here in May. So yeah, really, for SoFi, Monday, if the market's green, we'll go up. If the market's red, we're going down. SoFi is just following the market. There's no fundamental news in the company itself. Nothing's changed. I still think it's a brilliant company. Yes, it is overpriced for current earnings. What are we on here? Price to earnings of 51. Yeah. So yeah, a lot of future growth is being priced into this share price right now. But I think it's achievable. So I'm keeping my money where my thesis is. and we'll see what happens next week. IBKR, another one, and below the my strike price on IBKR at 66. More than happy to own it at that level. It's profitable business. We are kind of more reasonable price to earnings, 30, touch high you could argue, but it's profitable business. We're growing bottom lines, and we came back off almost touching our 200-day moving average on the Friday, so that could indicate that the sellers have given way to the buyers, although it was a slight red day. We'll see what happens. And you kind of get in a bit of a cheap view because this is the end of next week and you can see how much better everything actually is. But yeah, we'll get that in the next video. And NU is where it is. I've got absolute faith we're going to the 20s on NU within the lifespan of my leap, so I'm not going to touch that. I missed an opportunity on Thursday on this big red day to get in around the 14.5 mark to sell another cash secured put. I mean, that's a lovely level I'd like to get back in, and it touched 2% premium for the 14.5 level, but by the time I was back at home and able to trade, I'd completely missed it, and it was down. It wasn't even 1%, I think, so it wasn't worth tying up any funds in. But nice green day back up again on Friday. HPE and Soxal, they are as they've always been. They're my huge long-term trades. HPE's come back down. It's now under my cost basis. If it keeps dropping, I might be able to do something with these covered calls. But it is also killing the leaps I've got on it at the moment. So I'd quite like HPE to jump back up. We'll see what happens. And of course, this is Soxal leveraged ETF. The moves in the wider market are 3 times as bad or good here. So you can see Thursday was a rough day for Soxal. There was that we reached a high of 39 and a low of, so it was a $9 move there. For Friday, it looks like the 200-day moving average held for Soxal, and you can see from the price we're back up here next week. But let's pretend you can't see that, please, as this is my vlog and I want to keep it up for my own trade reflection. You'll forgive some lateness on some of these videos, even if they're a week ahead. Yep, so that's where my portfolio ended the week. Okay, there's not much more to say about that. That was at the end of week 46. Everything was down. Lots of nervousness around that the Monday would open up further down and we would start to see a bigger sell-off. But with this, my first rule is I do not sell cash secured puts on anything I wouldn't want to own, and especially not at a price I would not be happy to own. And everything I do sell cash secure puts on, I would be happy to turn around and sell covered calls on, like I am doing for UPST, NVO and PayPal right now. All good companies that I think will remain good companies and will come back. I'm just taking premium and lowering the cost basis every week while I wait for that inevitable turnaround. Alright, well that's all I have for week 46 recap. I will be straight on to week 47 recap in a moment. Okay, thanks all. Stay profitable and stay healthy. Catch you in the next one.